Hello and welcome to another edition of Trading News and Views. This is Cornerstone J316 with this week's analysis October 2nd through October 6th. This video will cover the fundamentals, recapping last week's major events, what's going to be happening this upcoming week, as well as the fundamental trends. We'll also take a look at the commitment of traders, technical levels with regards to institutional activity, as well as a potential trade setup with regards to the British pound US dollar. Recapping last week's events, really one, but was pretty insignificant action-wise. Had to do with the Reserve Bank of New Zealand coming out with no change, pretty much neutral at this point. The chart that you see right here is actually a currency index of the New Zealand dollar. So even the large players were pretty much subdued and sidelined as this the index pretty much went back and forth. And now for many traders that traded the New Zealand dollar this week, if they're expecting some follow through and didn't see it, this is pretty much the reason why. Just the larger players were off to the side. Looking at this upcoming week, really I've got this broken up into two slides just because of the amount of information that's coming out. Just to kind of want to highlight this, and I know I have said this in previous videos, always look for in the numbers really two things. If for example, like with the British pound manufacturing PMI, they're expecting 56.3 versus 56.9. This is what this number was last time, so not a whole lot of a deviation right here. Then a little bit later on with the US dollar ISM information that comes out, expecting 57.9 versus 58.8. Again, not too much of a deviation that comes into play here. A little bit later on, the Reserve Bank of Australia comes out with its cash rate and rate statement. Expected no change with regards to that. Then on Tuesday, we've got construction PMI 51.2 versus 51.1. Again, not too much of a deviation here. A little bit later on, we have one of the voting members of the FOMC that's coming out and speaking. He has a tendency to be somewhat dovish, so it's going to be interesting to see the tone of his speech if he continues to stay the course as far as being dovish, or if there's some kind of indication that he could be changing his stance. Then on Wednesday, we've got a full day starting off with the services PMI 53.3 versus 53.2, so just a small uptick. Then a little bit later on, we've got ADP, non-farm employment change. They are starting to factor in the storms that took place here in the U.S. So ADP over the last several months is starting to lose some of its weight. It just seems that the numbers they come out with is much different than what is actually released. So again, it's especially important to see if sentiment agrees with the number that comes out. And a little bit later on, we've got ISM, non-manufacturing PMI, pretty much right in line with what happened prior month. We've got two key speakers speaking. Not sure how much of an impact on what they're saying is going to have on the markets. Really do not expect Draghi to say anything major when he is speaking at a conference. And then same thing for Yellen. The only thing I would pay attention is to see she has mentioned for the last few weeks with regards to inflation. So it's going to be interesting to see if she does mention that in any of her remarks. And then a little bit later on, we've got the Australian dollar with regards to retail sales and trade balance. They are expecting an uptick in both of these. Moving on to part two of the slides, we've got Thursday with the Canadian dollar as trade balance. We've got some more unemployment claims that come out that they're expecting 270,000. Then on Friday, we have Canadian dollar with its employment change unemployment rate, and then probably the largest significant economic report that comes out has to do with the non-farm employment change. They are expecting 88,000 versus 156,000, so that's quite a significant drop. September, the street is expecting, with the storms that took place in the U.S., that to have an effect on the numbers. So the range they are expecting between 30,000 and 140,000. So one, is going to be interesting to see what that number comes out, and two, how the street reacts to it. Then unemployment is expected to stay the same at 4.4. Range is 4.3 to 4.5. So again, probably the key is obviously with this number coming out, with the effects that the storms had here on the U.S., the street is expecting that to be built into the report that comes out. Let's take a look at the fundamental health trends. Really, the winner had to do with the Japanese yen. A couple reports towards the latter part of the week was rather bullish. Then the laggers are the ones that took a dip. It was the Canadian dollar, euro dollar, British pound, and USD. Take a look at the commitment of traders report. Really, I just focus on the non-commercials. As I've stated before, it's quite a bit of information. However, I'm just focusing on what the non-commercials are doing, whether they're adding to their positions or reducing overall. To start things off, really the Australian dollar and Canadian dollar, really for the last 2 weeks, had a little bit of a hiccup here. Seemed like positions were starting to show signs that they were reducing, but again, it seems like the activity has picked up to the upside. British pound, really for the last 3 weeks, has picked up, and then the U.S. dollar has gone bearish. So New Zealand dollar is one of the newer ones I've added. That's why you see these blank ones as time goes on. This will start to fill on. Getting into the levels with regards to major FX pairs, I have added the U.S. dollar, Swiss franc this time. Probably the one that probably sticks out the most has to do with the New Zealand dollar. It really has hit this area pretty hard and bounced for 3 times. So this is going to be a key area I'm going to be looking at to see if in fact that does break. It could see a nice acceleration to the downside. Let's take a look at a potential trade setup I'm looking at on a daily basis, or a swing trade. Really, the important thing I always look for is confluence. You know, you hear that so often from traders, but how I judge confluence has to do with the COT information that's come out. If you remember on that one slide, the British pound has been up for the last couple weeks, and the US dollar has been down. So the chart that you're seeing here actually is a daily chart of the British pound US dollar, and I'm waiting for a pullback to this 1.3200. Nice even round number. There's another reason I'm taking it. It's an also key level where I feel some institutional activity is taking place. I feel news can be a catalyst to drive that price down. Once it hits, I will generally wait to see the reaction and then get in if it seems like a good basis of support. Risking 1 pip to make 5, so I feel the money management aspect, really this yellow line is my stop. Looking to enter in at the 1.3200, and then looking to take this back up towards the highs. As always, if you have any questions or comments, shoot me an email at cornerstonej316@gmail.com. Thanks for watching, and have a great and profitable week, everybody.